Safety. We all love safety. Being safe can be defined as straying away from fear. The fear that insurance companies use every year to make billions of dollars. Confused? Well, let me explain. People buy insurance to avoid the possible risk of them being liable. For example, if someone was to buy car insurance, it would be to avoid the risk of either paying the full out-of-pocket cost for their vehicle or the vehicles of other people in the case of an accident. Of course, the insurance won't get rid of the possible dangers of people getting hurt, but it will make sure that your wallet isn't hurt. If you want a more in-depth video of these type of insurances, watch our last video. Now that you somewhat have an idea of how insurance operates, let's get into the different types of insurance plans that people buy. Today, we'll be specific on medical insurance plans. These plans include HMOs, PPOs, EPOs, and many more. Now, if these sounded like the R2-D2 robot from Star Wars, don't worry. We'll make it make sense. Now, when in the market of medical plans, it's important to choose the plan that's best suited for your needs. Firstly, we have an HMO, or Health Maintenance Organization. This plan usually costs less than other medical plans, but it comes with a reason. The reason being the limited choice of doctors that you can choose from when compared to other plans. Moreover, you must choose a primary care doctor when you're sick, rather than first referring to an emergency doctor. For example, let's say that you fell off your bike and you landed on your wrist. Now, since you're a cash-curious viewer, you handle it and decide that it's just a little pain. So you go to your primary care physician and the doctor tells you that you need to get it checked out with a specialist, or a bone doctor, I guess. Not sure what bone doctors are called, but I guess that's what's called cash-curious. Anyways, then you get your medical report from the specialist about whether or not you're good to go. Getting into PPOs, or Preferred Provider Organization, as the name states, is a plan where you get the freedom to choose from many doctors or more special in-network doctors. That's great and all, but nothing good comes without a cost. That's why PPOs tend to be higher in price than other plans. Going back to the example from before, when you fall down from your bike, you no longer have to go to your primary care physician, rather an in-network physician. Think of it like LinkedIn, where you can't connect with certain people as they aren't in your connection web yet. However, there are out-of-network benefits, as they help pay for the care that you receive from providers who usually don't take the plan that you bought. These benefits only come up when something is deemed an emergency situation, but again, for everything good comes more of a cost. Payment-wise, each time you visit the doctor, you will make a copay deposit. Then comes EPOs, or Exclusive Provider Organization. The word itself is enough for anyone to think it's the best of the best. This plan refers to a network-based plan. Just like comprehensive liability coverage and auto insurance covers both collision and liability insurances, an EPO is similar, as it's a merger of both PPOs and HMOs. Being a network-based plan, an EPO customer must be under a certain network of providers. The hybrid part comes from the fact that it's like an HMO, where there are only in-network benefits, and like a PPO, where as well as you can choose your own doctor. It's all good. Well, that's all, folks. Make sure to comment down below for any videos you want to see next, and until next time, I hope you learned something today. Bye.